Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video, we're going to be taking a quick look across markets, talking about some of the major themes that have been in play. Pretty much the dominant theme so far this week has been a resurgence of bank crisis fears. So we've seen First Republic Bank, their shares cratering another like 70% in the last 2 days, down more than 95% from their earlier yearly highs. Um, Prior to when bank crisis concerns first emerged in March. But pretty much they reported earnings, and their earnings revealed that investors withdrew another 100 billion in funds basically from their bank in the first quarter, um, which obviously has everyone thinking that this bank is soon going to be insolvent, and regulators are possibly soon going to step in and close it down, take it over, pretty much like they did with some of those other ones like Silicon Valley Bank, Silvergate Bank, Signature Bank last month. This could be the fourth domino to fall, basically. Um, but it basically highlights the fact that this US banking crisis is not yet over. It might be slow moving. The pace of the headlines might have slowed down prior to, First Republic Bank's earnings. But this bank crisis is not going away because investors continue to withdraw their deposits from the US banking system, partially, more recently motivated by fears that the banks might fail, but also because you can get better yields elsewhere, like in Fed money, US government money market funds, and that kind of stuff. You can get these higher yields because of the high US government bond yields, basically, by owning that. Um, and what happens when there's a banking crisis? Well, lending crawls to a halt or contracts, and lending is like the key driver of economic growth in any country. So basically, with the resurgence of these banking fears, we've got a resurgence of recession fears in the US and a resurgence of bets that the Fed is going to be cutting interest rates. So that's why in yesterday's trade idea video, I was saying we potentially could see a pop higher in the Dixie out of this recent trend channel, but for now, that's not happening. And like I said in yesterday's video, you got to trade what you see. For now, looks like we're odds on, as long as we stay within this downwards trend channel, to retest annual lows in the 100 spot 70 area, currently around 103. In terms of some other asset classes, you got stocks coming off on concerns about a recession. Yes, okay, being propped up a little bit by optimism for a Fed interest rate hiking cycle and lower yields, because as I'll show you in a second, yields have been falling, which is supporting the Nasdaq. You can see here, this is the Nasdaq 100 index, or a CFD that tracks it anyway. But recession concerns remaining in the driving seat for now, which could remain the case. It's difficult to make an argument for a big equity market rally when you're talking about a bank crisis. But anyway, here's yields. 2 year back below 4% and potentially going to move back towards yearly lows. 10 year back below 3.5%, also potentially going to move back to yearly lows. Oil struggling, as you'd probably expect when you're talking about recession fears, but still holding above its pre-OPEC surprise output hike levels, although that gap has now been filled today. Gold, interesting one. I think it should be moving higher than it actually is right now. So just be on standby for gold to potentially pop back above 2000 again and go back and make another run towards the record highs in this 2070 area. Why do I think gold's going to go up? Well, I mean, you're actually seeing Bitcoin rallying on a safe haven bid because of the banking crisis concerns and optimism about Fed rate cutting cycle later this year to support growth. So why not see gold pop higher as well? Obviously, everyone's excited that Bitcoin and cryptos are back in a bull market, and we had a nice bounce at the 50-day moving average. So there's some, longer term tailwinds in play. But yeah, this is pretty much what's going on in the market right now. In terms of what we've got for the rest of the week, tomorrow, Thursday, we've got US GDP numbers coming out for Q1, and then Friday we've got core PCE US inflation numbers coming out. Now that's the Fed's favored gauge of inflation. Um, Obviously, next week we've got the actual Fed meeting, another 25 basis point rate hike still expected, but it's like if we've got a bank crisis, how many more rate hikes can they reasonably do? And the answer is probably not that many. Um, Obviously, next week as well, other stuff in the US because it's the first week of the month. So it'll be ISM surveys, US jobs data. So from the macro perspective, big couple of weeks coming up, big couple of days at least, anyway. So yeah, guys, hope you all enjoyed the video. Hope you all found it informative, and I'll see you all in the next one.